All right, hi folks, welcome back to the channel. Today we'll just be briefly touching upon what's going on in the market and some things that I think that we should all pay attention to and just think about before we make any big moves with our investment accounts or our stocks and equity portfolios. Obviously, this past month and a half, 2 months has been a crazy ride. Back February to early March, we saw a huge crash. The Dow Jones Industrial was down over 35% from that time. But since then, about mid-March, we've been slowly on the rise with a lot of news coming out, a lot of people thinking that the worst of it might be over. We might have seen the lows in mid-March. We're going back up to where we were before. At the time of this recording, the S&P 500 is only down about from where we were just 1 year ago. So with the barrage of news that has been coming out between more federal stimulus packages on its way, more industries being looked at for potential help and monetary assistance, the Federal Reserve in the US is looking at even more measures to try to increase liquidity and to guarantee the market's solvency. Same thing in Europe, European central banks putting in new measures. And just this week, we've had a new oil meeting with OPEC Plus, Russia, US, trying to find a solution to the recent oil crisis. And on top of all of that financial news, we also have what's going on in the world, the coronavirus. China, the big epicenter, where it all started. The cities opened back up. People are saying that China is beginning its return to normalcy. And over in Italy, which was hit pretty hard from the coronavirus, we're also seeing some signs of hope, some good news with case numbers dropping after their countrywide lockdown. Here in the States, New York has been reporting less cases, maybe possibly a taper off in deaths, but that's still to be seen with the US still under lockdown in most major areas. So a lot of us are asking now, is that it? You know, we're staying at home, we've been at home for a month, it seems like China's opening up, Italy's doing a lot better. We had a scare over in the UK with Boris Johnson, but he seems to have recovered as well. Stock markets are looking great. It's been up all week, the past week and a half, 2 weeks. Is this over? Do I have to worry about my retirement accounts, my 401ks? Is this a good time to get back into those stocks that seem to be at such a discount with a lot of stocks, especially in the airline travel industry, still down significantly from where they were in January and early of this year, where they were trading at all-time highs? I know a lot of people are probably very concerned in mid-March when the market seemed like it was just free falling. A lot of people pulling out everything in their retirement accounts, thinking that this is such a terrible time. But if you are investing for the long run and you didn't really touch your account, things probably went back up just a little bit. But what I kind of want to talk about today is we shouldn't get too complacent and think that things are just over, especially if you're just looking at financial news and not really not looking at the bigger picture, the world events that are going on today. Financial news is driven a lot on market sentiment, which can change in just a couple hours. For example, last Wednesday, the market shot way up 3% S&P 500, but closed the end of the day down just a couple points. But during that morning, a lot of articles and headlines came out saying how markets are rallying, investors are feeling confident in the market, that the worst is over. They're expecting workers to be able to go back to their jobs after this is all over, after the lockdowns are lifted. But as the day went on and as the market took a turn for the worse and ultimately ended up down just a little bit, headlines at the end of the day were a little different. And always after hours, futures, headlines will always change throughout the night. If they're opening down a little bit, news articles will say something about new cases or new exposures, markets feeling down. But if they're up, they'll be talking about how we seem to be on a road to recovery. So as with a lot of things, and in addition to this news, we have experts from investment banks, notable investors, hedge fund managers, US federal authorities. You can pretty much find somebody to talk about either a case for recovery or a case for another retest of the March lows. So it's really hard to get a sense of what exactly is going on. If you really feel like you're feeling bullish about the market, there's people that you can look to, articles that you can read. If you're feeling bearish, a lot of people also out there saying that the worst has yet to come. So what exactly is going on? Is this the right time for me to invest again? Just talking from my personal experience, I don't think this is over just quite yet. We all know China has opened up, but there's been a lot of speculation about how accurate their numbers are, and the cities have been opened up with some restrictions as well. And over here in the US, although coronavirus cases and death estimates have seemed to go down, a lot of these are relying on the assumption that these shelter-in-place orders are to remain in effect until May, which is still about a month out from now. We saw a couple weeks ago President Trump was pushing for us to get back to work by Easter, which is just in a couple days. Obviously, that's not happening. He has since extended that federal guideline to the end of April. So we're just a month away, and even now, as the good news starts to come in, we will be seeing a lot more people growing anxious, wanting to get back to work. We could see local and state leaders trying to push people to go back to work earlier rather than later. But from a public health standpoint, a lot of experts are saying this might not be the right idea. If we open up too early, we risk a second wave of infections where, although numbers have been cut down, it just takes a couple people to just spread it back out again, and then we'd have to go into lockdown. One of the things I think we could take a look at is how China and Italy numbers respond in the coming weeks and months. I think April and early May will be significant to see if there will be a second wave of infections, or if these lockdown measures are able to stop the spread completely. Additionally, South Korea has seemed to be doing better as well. Now, moving into the markets, the fear and greed index still has us at a moderate fear level, whereas in March we were extremely fearful, and earlier in the year we were extremely greedy. So we're trending towards the greedy side, which is why I hesitate to say that the worst is over. And also, if we've been following the market lately, it seems like nothing's making sense. Unemployment numbers are just spiking, they're going crazy, but yet the market's still up 2 to 3%. What I think is happening is that a lot of investors are under the assumption that this crisis will be managed and we all will be able to go back to work, business as usual, as soon as a month or two from now. But what we need to look at, as I mentioned before, is how those numbers in other countries show after those lockdown methods have been lifted. If their numbers spike again, US authorities may be more cautious in sending workers back to work in fear of a second wave. So I think if you're trying to invest in the market, trying to buy low, buy the dip, it's always really hard. No one can really predict when exactly this will be over. You ask 10 different people, they'll all give you a different version on how they think this will work. But I've mentioned in a couple of my other videos, if you do have some money set aside, you want to invest, could be a good time to consider dollar cost averaging, either up or down. Don't throw everything in there at once, because things can go right back down. But on the other hand, if things work out, if these lockdown measures are effective and the economy is able to open up without much further damage, we could be looking at a very rapid. On the other hand, we have seen a lot of people pointing to historical trends, for example, '08, Great Depression, where we've seen corrections up and down. Markets dropping, going back up a little, and then going back down, taking a couple months to eventually reach the bottom. We very well could be heading into a recession. A lot of people are also talking about how US corporate debt's at its all-time highs, with the Fed buying equities, buying junk bonds, and buying up other funds as well. That could be a sign that there could be something going on in the background, like a bubble, something similar to the housing crisis in '08. It's too soon to tell yet. And I guess the purpose of this video is to just remind us all that no one knows for sure what's going to happen. Do your own research, talk to your financial advisor, think about what risks you're willing to take and what losses you can afford. And if you do have some money, this could be a good time to enter into the market. If you think that we are in for a recovery, a lot of blue chip stocks, companies that we traditionally think as being very reliable, the Googles, Amazons, Disney's, Microsofts of the world, have dropped significantly without much real impact to their business other than coronavirus related shutdowns. Even if the market was overvalued earlier this year when we were at all-time highs, it very well could trend back upwards. But on the other hand, the market could have been in a bubble earlier this year and we might see lower lows. So just hold on to your money or invest a little right now. Don't put all your eggs in one basket. It's still a little too early to see exactly what's going to happen. I'd imagine that we know a lot more about how everything's going to shake up end of April going into May. So that might be a good time if you're a little more uncertain, a little more hesitant, to just hold on to money right now and then to wait for the dust to settle, see how things pan out. But that was just my quick thoughts about this whole situation on if you should be investing, if you shouldn't be investing. As always, if you're just investing for the long term, if you're still 30 to 40 years away from retirement, right now is not the time to panic. Keep on investing consistently if you can, making those contributions. I know some companies have stopped their retirement matching 401k matches, but even without that, if you can't afford it, continue contributing, and in the long run, hopefully we go up. Obviously, that's not guaranteed, but historically speaking, markets have gone up and up and up. So thanks so much for watching this video. Comment down below if you have any comments or any questions. Like the video if you thought this was useful. Give this a like and stay subscribed. Thanks for watching. Peace.